Good morning, traders. It is 8:02 a.m. Chicago time on Thursday, the 6th of October, 2022. Today, we're at episode number 2330. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So, real quick here, pop right into this pre-market summary sheet. Overall, market condition across the board is pretty mixed. We are slightly on the sell side, just slightly this morning, led by the small caps, the Russell. Crude, which has popped higher over the last few days, is taking a bit of a break this morning as it just opened. It opened right on top of the bulk of yesterday's trading. Yesterday was a big reversal day up, and crude is balancing against yesterday and is standing by. The big news this morning is OPEC Plus went from potentially cutting 500,000 barrels per day over the weekend to raising that to 1 million, to actually deciding to cut 2 million barrels per day in production. And this has kind of put a put floor, some support under crude. And I've talked about this quite a bit. If you're in the Convergent Trading Mavens channel, you'll see me posting about this, that it's just refused to sell off with the rest of the market last week as liquidation hit all asset classes. Crude would not participate as much. This morning, U.S. initial claims came in at 219,000, higher than the 196,000 expected. Now remember, initial claims, this is people making claims for unemployment. Initial claims, the higher the number, the more people are claiming unemployment, which relieves the pressure on the employment side of the inflation figure, which is one of the stickier sides. The most sticky sides of inflation are wages, what people get paid. People don't accept lower wages very easily, and housing are some of the key components of that. Initial claims coming in higher actually is a little bit of relief on inflation. But tomorrow, we've got the non-farm payrolls and the unemployment rate out of the U.S. So we are looking, excuse me, we're looking for that tomorrow. Expecting to be today, as a result of that, expecting today to be somewhat choppy, a lot like yesterday was. So that's it. Key earnings this morning: Conagra Brands, Constellation Brands, McCormick and Company, Levi Strauss after the close. So those other ones are before, Levi Strauss after. Looking at the calendar, we've had factory orders out of Germany, retail sales out of the EU. I'm not going to cover these. I really need to spend less time on this sheet here, more time on the charts. But you can see on the calendar what's ahead. We've got Fed speakers galore. We've had just a massive amount of time that Fed presidents are speaking, and that continues. I talked about this. This was predicted before, at the beginning of September, that these guys are likely to hit the road in campaign, and this is what it is. U.S. Treasury Secretary Yellen's going to talk about the global economy. Might be a market mover there. And then at the end of the day, at 8:30 p.m. Eastern U.S. time, we're looking for the Australian Reserve Bank, the Reserve Bank of Australia Financial Stability Review. Looking at the S&P multi-distribution profile this morning, looking a whole lot like yesterday. Just opening, checking high, and then falling and staying well ahead of the market-generated levels, VWAP mid, and really exploring to the downside. Very much a simile of yesterday's trading. 300,000 contracts traded in the overnight session. The inventory is 34% short. Yesterday was 100%. And the range is 55.75 points, with the point of control shifting to 37.95. So this is the status of this morning. So in summary, the S&P is opening in balance. Same with the other indices, is opening in balance, doing more of the same. The S&P is pushing up against that 3,800 and battling in the 3,800 zone still. Let's take a look at that. But first, let's take a look at what was expected yesterday and what we got. Yesterday, the primary idea was that the market is likely to push up towards VWAP and then fall off. And I expected it to push potentially, definitely through the 50. The 50 was a key target, expected to bounce at 50. And then I was looking for it to push into the gap mid of 30 and then potentially close the gap at 12. Expected a choppy day yesterday. The second scenario is a squeeze to 50, back to 85, fight the 85, and then squeeze through the 3,800, go to the settlement, and then squeeze to 3,800, and then use 3,800 as a base for continuation higher, potentially into the 38 level. It didn't quite have the volatility that we've been seeing lately. Here's yesterday. We open up. We don't quite get to the 85. Let me change the color here. We didn't quite get to the 85, but we did push up. We had basically an open auction in range, out of value, and then we finally fall. And the expectation is we would test this 50 and get down to 30, right? That's the level. It could not get there. It got to 34 before the bounce. And so it ended up breaking the IB low, extending the IB low. So in that situation, the probability of breaking the IB high, which was, as you see there, the yellow line, 37.77, the probability of breaking that was somewhere in the 30% range, something like that. And it ended up actually squeezing, and I expected it to actually sit in the middle for the rest of the session. But what it did is it put in a legitimate double top at the IB high, which has a historical probability of breaking by the end of the session of about 82% past performance, not necessarily indicative of future results. And the expectation is I would want to get in on this long somewhere, and that long could be all the way down to the mid and VWAP sandwich area right in here. So I believe I'm getting what my daughters had last week. Just a lot of very scratchy throat, so I'm pushing the tea this morning. So it pulls back to the 67 area, and then from there it catapults out. Now, here's the thing. This is the setup for this trade. So we know that we poked the IB low. We know the probability of poking the IB high historically. The historical probability is about 30%. The probability of it doing it yesterday is always 50-50. This particular instance, the outcome is always 50-50, so we don't know if it'll go or if it won't. But once it does that double IB top, that's a setup for me. I'm looking for a long. Could not get this long, mainly because I wasn't here for it. I was on Futures Radio Show with Anthony Crudelli and Joe Fahmy and Brian Lunt. If you did not catch that show about trading, how to trade in high volatility, you should listen to it, mainly because the other two guys, Anthony Crudelli and I, are short-term futures traders. That's how we came into the business, really, although I started with equities. But the other guys were swing traders, and Joe more of a macro type person. But in any case, I digress. So we have a double IB high, so that's a setup for me. We have the market having pushed through the mid, which tells me that it's actually now no longer short biased. I was short biased coming in. If you remember the green line, that green line is pointing down from where we opened yesterday. But that's not the case once we get above the mid. It's telling me that the market has enough strength to push through the mid. So now I have a setup to get long, and couldn't get the long, but here you see this is why I don't have FOMO. There's always another place to get in, or there's always a reason to just sit on your hands and not chase it, not to give away your edge by chasing a market that is too far away from where we can define risk. So that pullback to the IB high by 3 ticks is a pretty solid setup for me, with a fixed stop. And then in this case, then I'm looking for it to push to at least 85, if you recall, from this chart. And I keep bringing this up because I want to make sure you understand that once we make a plan, we follow it. So I'm looking for the 85, and that would really cover my risk. And it squeezed into the 3,800. We're looking for it to bounce off of the 3,805. So looking for a fight up here, and it finally pushes and it pulls back to right there. You see it, 3,805. You see the number right here, 3,805, for a continuation. And in this case, on the high side, but at this point, it was late in the day, and the expectation that it would go that far is quite limited. I expect it to go to 38.38, so there's a lot of room from the 05, so I can find a spot here around the 05 looking long to push into the 38.38 area. It fails at 20, comes back, sells off into the close. Pretty decent market on close and balance there on the sell side. And then we end up finishing the session really neutral with a close and a settlement that is neutral extreme up. So neutral extreme up is generally a very strong indication, especially if we've been falling and we break lower, we break the IB low, and then push up and break the IB high, pull back, and then finish at the high after breaking the IB, after going neutral. Generally, that's a pretty good reversal signal for the next session at the bottom of a run. Here, we've run up a little bit. We're sitting in balance, and we're having a neutral extreme. It still has a bullish tilt, but it's not the same as a reversal, because a lot of the energy that would bring prices higher has already been expended in the rally that happened over this entire week. But I still expect the overnight session to exceed that high, of 38.20 that was put in during a session. We did not do that. So as we look at the overnight session, we missed that high by 2 ticks. We consolidated, rode the VWAP, broke below the VWAP, pulled back to the VWAP, and then we break lower on some size. Okay, and then for much of the session, we stay well ahead of the full session VWAP, full session mid, until just now, until about 45 minutes ago or so. And on the initial claims number. And so this thing is still has a downward skew, but let's not forget the context of where we are. And the context of where we are is we are in balance. Okay, so let's look at that a little bit better in this chart. So some of the details I wanted to share with you today, on the left is the ES, on the right is crude oil. Let's focus on the ES. The ES, you're probably, if you've been listening a while, you're probably very familiar with the prices above 39.50. We have a lot going on at 41.50 and so on. So we've shifted down. We had balance of a few days, so this is a few days of trading. These are merged profiles. When profiles, let's say the market trades and it forms a profile. If the next day forms a profile on top of that, then those two profiles are balanced. And I'm not interested in the latest profile. I'm interested in the overall picture of what it's doing. And so what I do is I merge those two profiles together, or as many as need be, to see what the overall balance is. Because the higher time frame doesn't really care about a day, doesn't care about a 30-point range. You're looking at much bigger ranges and tying them back to yields and all these other things. But for us, we keep things simple. So we've merged this profile. We've merged all profiles that make up the bottom. And once we gap away, so we merge all the days together. I did that a few videos ago with you. We gapped up. We've left the gap open. And we have this untouched close and untouched point of control below. And then yesterday, what we did is we traded below the gap up Tuesday and above, and we finished in the middle, complete balance. So what we do is, as you would expect, we would merge these two profiles together to see what the market condition is now, complete balance. So coming into the session, balance rules. Balance rules. So we're not looking to trade breakouts today. We're not looking to get too aggressive with our targets and so on. Balance rules also say that the more the market is balanced and consolidating, the more energy it has, because people are committed and have taken positions. That's the fuel. The volume is the fuel. The price is just an indicator of direction. Like if you remember vectors from school, a vector has a direction and power and energy, right? So the energy is actually the volume, the direction or the indication is price. Think of the market in that sense. And what we have here is a very sharp profile. So today I'm expecting that it's very, very likely to balance out. It's very likely to trade the range that we're in. We are now stuck between the lower balance and the upper balance. We are filling in this area in between. We have a lot of room to the upside to test the next balance zone. We have a fair amount of room to the downside, and we're sitting in the middle. So we are waiting for news. This is what happens when the market's like, there's no reason for me to move money in or move money out. What could be that news? Take a guess there. The news is non-farm payrolls, right? So today is the day right before non-farm payrolls, and so to me, it is very, very likely to stay choppy today. So be aware. Just come in with that expectation. If it breaks, it starts to trend. Then you trade your trend plan. You pull out your trend plan and you trade that. This morning, I'm coming in with my balance plan. So that's what I wanted to share. I know there's a lot that I'm covering here, and I'm speaking very quickly for some of you maybe who are not native English speakers. But this condition here, I just want to remind you of what the context of the market is, so that when you come in and you trade, you're not just stuck with what it's doing intraday. Look at the bigger picture. We have a market that is in the process of potentially reversing, and now we've pumped the brakes, we've stalled on that reversal, and the question becomes, do the bulls have it and they can push through? And in that situation, then we're looking for 38.80, right? So we're looking for 38.38, 38.50, and then 38.80 is the next area. If once it gets to 38.80, does it balance there for a little bit, or does it not care and push through? In which case, we're looking for 39.50, and we're working through these levels and these areas one by one. So we can see that this is balanced with a sharp kurtosis. This is balanced with a fairly even distribution of prices. And the market now either has to decide it wants to check the balance below for support, or if it wants to tag the balance above to see how much resistance and if sellers can be brought into the game to bring it back into balance. So that's the market's job, is to find the most efficient price to get as many people trading as possible. That's the primary objective of the market. That's its mandate. Okay, so with that being said, let's take a quick peek at relative delta. I really want to shorten these trader bites, but also cover crude oil, and I don't think it's possible. But I do need to work on shortening these. But there's a lot to share. There's a lot of structure going on. There's some really important moves going on. The market this morning, we've got prices moving lower, delta positive. So as price was moving lower this morning, the delta was actually still positive. So there's this measure of, okay, we're going to lift as price goes lower. I'm going to pull my bid and I'm going to lift. I'm going to pull my bid and I'm going to lift, and that creates a positive delta on the way down. There's a positive vibe here. So even though we're in balance, that we're seeing that the support is occurring in a very shy way. We're coming off a little bit here after testing mid and VWAP right here. We just tested mid and VWAP for the overnight session. We're pulling back, but you have the large lots and the small lots, which are 1 lot to 9 lot for the small, 10 lots to 99 lots, trading for large, and then 100 lots and greater are V large, the yellow line, and the V large are not as active overnight, and that's expected unless there's a big number. And these things are positive. I expect a little bit of support. So if you get short this morning, you may notice that it really has a hard time moving away from your entry price. If you get long, it really has a hard time moving in the direction of your away from your entry price. And what this is saying is it's balanced. So today is a good day to be picky. Let the market come to you. Lay your trap. Let the prey come into your trap. Don't go chasing it. Don't go hunting. The ranges are not likely to be big enough for you to do that. So what are we expecting for today? It's a lot to cover, right? Can you tell that I really love this job? So this morning, opening inside of a multi-distribution profile from yesterday, inside of the overnight session of yesterday, inside of the P-shaped profile from 2 days ago, and we're opening right on here. So we have built ourselves a heck of an MC at with the point of, with the settlement in 94 here. Hang on. So we've got a lot going on. We are completely imbalanced, expecting a choppy open, and I'm looking for this thing to try to pull back this morning, and then I'm looking for it to test 3,800 like it's done here quite a bit, and like it did here quite a bit. Test the 3,800, pull up, use the 3,800 as a base, and then grind its way into the purple line that you see there, which is 38, 38, 38. I'm expecting it to be balanced and a grind today. If anything, it might fall back into range. This is scenario 1, very different than yesterday's scenario 1, which was bearish. Scenario 2, if I can get the color right. Scenario 2, an open that stays in the middle, squeezes higher towards 3,800, unable, finds those sellers. There were icebergs at 90, 95, 3,800, 05, 3,820 had icebergs in it. There's a lot of supply up top. And so it goes to 3,805, 3,810, and then impulses back below 3,800. Consolidates, and now we are likely to extend the overnight stat down to the downside, and now we have an opportunity at this gap, which had a mid of 3,830, which has shifted now, and the number we're really looking for to close this structure for the next leg is 12. Okay, so that's scenario 2 there. Not likely to get to it today. There's just no reason for somebody to commit before the non-farm payrolls tomorrow morning. Tell me what you think. I'm going to drop this. I'm going to just leave you here, but tell me what you think. Give me your feedback. Are you getting what you feel you should be getting from these trader bites? Is this setting you up to check your work and to set the right time frame to come into the market with good context and to check your work? It's really important to check your work rather than just taking for face value what I give you. Okay? Write your comments. You'll have a few minutes to post it in here. I'd like to get your feedback. And also, please hit the subscribe and like buttons on YouTube so that this channel can be more apparent and can come up for other traders looking to trade as a professional. Good luck.